We're talking insurance, that lovely subject that we all love dealing with. What do we do when there is a declined claim? Now, you don't have to just go, well, so sorry, see you later. There's nothing that we can do. We've lost X amount of money. No. What you want to do, first of all, is whenever there's a declined claim, okay, even though they may tell you this verbally, they may tell you on the phone or they may put it in an email, one thing that will always be involved with a declined claim is a formal declinature letter. In that declinature letter, it's going to detail what happened, the exclusions and conditions of the policy wording, and how the exclusions apply to the event and how they arrived at their decision to decline your claim. Now, wait for that letter, go through it in detail, because there can be mistakes in the letter, which means if there's mistakes in the letter, then they've erroneously declined the claim, and then you would have a recourse against them to say, no, that was incorrect, blah, blah, blah. This is where a broker will really help out, because a broker will understand the wordings intimately. They'll understand claims as well, and they'll be able to provide more guidance as to whether it is a declined claim 100% or if there's grey. The best brokers for their clients will always try and find a little bit of grey in a claim. If there's grey, then guess what? They have to pay. It's just the quantum that comes into consideration. So, number one, wait for the decline letter, go through it, and then if you have some recourse, go for it. Now, if you don't have any recourse, the decline letter is what it is and everything makes sense, right? But you still don't agree with their decision, then you can proceed to go through what's called the internal disputes resolution process. Now, the claims person that you're dealing with, you would simply tell them that. They would actually probably put it on their email, or they'll make you aware of the internal disputes resolution process. Now, that is a completely separate team within the insurance company. When you go down the IDR process, what they'll do is they'll have a look at what the claims person did, and then they'll also have a look as to what you're saying. All right, now they'll go through everything, and then they'll either agree with the position of the claims person, or they'll agree with yourself. Okay, and it completely depends on the circumstances, policy, etc., etc. These guys, they do try and look at things from an independent perspective, because as I'll detail, the further we go down the rabbit hole, it ends up costing the insurer money. Okay, so a bit more of a commercial decision comes into play here. Failing that, internal disputes resolution process upholds the declined claim. Where do you go now? Third level, now you start looking at the external disputes resolution process. This is where an independent third party comes into play. That third party is known as AFCA, the Australian Financial Complaints Authority. Completely independent, completely third party. What they'll do is they'll review your complaint. Okay, they'll go through all of the circumstances, they'll get the file from the insurance company, they'll go through everything, they'll talk to the claims people, they'll talk to you, and then they will arrive at a decision. That decision is legally binding if you accept it. Okay, the insurer can't just go, no, we don't accept it and we move on, right? No. Once AFCA make a decision, then from there, they've got to do what AFCA say. Now, all companies, financial firms that hold an AFSL must be a member of AFCA. Why? Because it gives customers like yourself a right of recourse, which is required in our industry, especially with private companies being involved. One thing that a lot of people don't know about AFCA is not only does a financial firm need to pay membership, but every time that there is a complaint, AFCA will charge, in this case, the insurance company, okay? That minimum is around $5,000, but it is increasing. So the moment that you put in a dispute with AFCA, after going through the other steps that we spoke about, the insurance company is going to be up for a bill of $5,000 straight away. So then when I was saying, with the internal disputes resolution process, a commercial decision enters into the frame. Because if it is a smaller claim and you make it known to them, make it known to them that you're prepared to go through the external disputes resolution process, straight up they're going to be up for $5,000. So if you have a loss that's less than $5,000 and you're in a pretty good position and you make it known at the IDR process, then that's going to have a little bit more bearing on their decision. Now, outside of the EDR process, okay, you still have one more avenue to go if you would like, okay? Personally, I've never been down this road. I've gone all the way through the EDR process, both in Australia and then also with Lloyd's of London. But as a customer, you can also proceed, if you don't agree with AFCA, of course, you can take legal action against the insurance company. Now, that will entail you engaging a legal professional at your own cost, okay? I hope this helps when it comes to claims. When there is a declined claim, don't worry, there are avenues. So first of all, wait for the decline letter. Second of all, failing that, IDR process. Failing that, third, then you go through the EDR process. And then finally, fourth, if you're still not happy and it is a sizable loss, ostensibly it would have to be, then you can take legal action against the insurance company. Hope this helps.